Hello and welcome to the Digital Digest, your weekly breakfast of insights, tips and tricks and general information that will help anyone trying to move things forward in this digital accountancy space. This show is brought to you by the Digital Disruptors and SB Digital, which are both pushing the boundaries in the digital accounting space. And I'm your host, Ryan Piercy, and this episode is on agriculture, landed estates and tech and the ability to help those. And I'm lucky enough to be joined by Jack Deal, an expert in agriculture in Scrumland in the east of England. To help us kind of dive into some of the problems that farmers, those with estates, managing those people, the costs, etc., and everything that goes with it. So, I think Jack, I'll start by asking you, what do you experience when talking to business owners in that space at the moment? What are their challenges that they're really struggling with?
Well, I mean, the challenges are many. You've just got to look out the window and see how wet it is, particularly in the east at the moment. To see some of the practical challenges, but from a tech and a kind of administration perspective, this is a sector where most of the businesses in it are owner-managed businesses. And I suppose that's quite unusual for such a valuable sector. You know, there's not a lot of private equity money or outside investment. A lot of them are owned and run by the same people. And so that gives them some interesting structures internally, particularly when the businesses are of a size where they just don't have the resource to have full-time finance teams. So on the ground, what we see is two main issues emerging. One is that businesses struggle to know how they're doing throughout the year. So traditionally, a lot of farming businesses have had to wait for their accountants to tell them how they've done for a particular harvest, or their consultants, and actually getting that live information has always been quite challenging. And the second thing is that lots of farming and estate businesses are now diversifying. They've really had to in many cases because of the pullback of subsidy and just because of the pressure on gross margin in the sector. So you've got lots of businesses who have done farmed in the main for many, many years and now doing things that are very different to farming, like run farm shops or wedding venues, or commercial property is quite common in the sector, but they're running property businesses or solar or all sorts of other things. And the back office needs for a farm versus a farm shop or a wedding venue or whatever it is are totally different. So getting your head around all of that is quite a challenge.
Yeah, not only that, but they butt up against each other, don't they? So the more you diversify, the more you've got to process. And if you're processing more different types of transactions, to try and get the profitability in any one of those areas becomes a huge challenge. I know that something that I guess businesses in the space tend to do is they budget well. They use consultants, they work out what they want to do in the next year. But then they can't, from my experience, they kind of just park that. And only once they've done their year-end accounts, which can be 2 years later, do they then get any understanding of how they've done against that budget. Is that what you experience?
Yeah, I mean, all of them budget to a sense. Particularly, many businesses in the sector run off some sort of finance, be it a loan for capital projects or an overdraft for working capital facilities, and therefore the bank asks for budgets. Lots of them employ outside consultants to produce those budgets, and you're absolutely right. If you produce a budget on day one of the year and that you have to pay someone to do that, you're unlikely to pay them to revisit it every single month. And integrating software and bits of tech that actually allow businesses to do that on the go is quite challenging. If you think about the typical year in the life of a farmer, you spend a good part of your year not generating any revenue, but generating value, because what the money you've spent is accumulating value in the ground. So from a reporting perspective, it's quite hard to know at any one time how you're doing, because you're spending lots of money, you're spending cash, but you're not actually making any profit until a certain point in time. So it's just getting the systems in place that allow that to work without loads of work.
Yeah, definitely. One of the biggest, I guess, differences I experienced when starting to work with agricultural businesses is that a year means not much to a farmer. It's a crop period, isn't it? Which is generally about 3 years. And so when I'm kind of going, okay, well, we want to look at the profitability, we want to look at the balance sheet. They're like, well, we don't care about that. It's actually, well, how have we done on this crop rotation? And so you've got to look at finance and financial reporting periods in a completely different way. And to do that in traditional software is a challenge. So you've got a lot of dedicated software out there that's dedicated specific for the agricultural space. but they're very, traditional. You're having to manually enter a lot of data. So to try and use modern tools, you've got to think a little bit outside the box. How do we utilize those tools to give the reporting that's needed? So let's focus first on, the bread and butter of the agricultural industry, which is, crops and the planting, cultivating and selling of those. And I think a lot of it comes down to looking at, and correct me if I'm wrong on this, specific crops that farm generally works with, and then rotation periods that they work across the various farms, and the ability to see the profitability of those individual crops. Is that about right?
Yeah. So rotation's driven by use terminology that's not my bag at all, but it's driven by science in a sense. So farms will have to grow certain things around certain times, and they've got certain choices that they have to make. That they can't just do whatever they like whenever they like. But what they do want to do is pick the crops that make sense for them and be able to give themselves the satisfaction of knowing that those crops have done well. What farms have is a lot of data. Data comes from everywhere on farm. When you harvest your wheat, your tractor will produce a whole load of data because it's run by a computer. It will tell you the yield off every field. It will produce you all sorts of data. It'll tell you the fuel usage. It will give you lots of data that, if you can gather it and use it properly, could be really useful. But what I don't have amongst my client base is a single farmer that can say, for that field, for that year, the gross margin was X, even though in their business they have the data to do that. But bringing it together is that challenge. So they've almost got the problem of lots of data and no way to sensibly bring that together. And the result of that is that what we see across the industry is that lots of decisions are made by gut feel. So people know that the wheat's been good this year, and they know they've managed costs, and they know that they're getting a good selling price, and that's enough. But there's not that single piece of that data point where they can just click on the field and say, the data tells me that field did really well this year.
Yeah, and I think the main thing I've experienced from this is that crop compliance software, which it's really good, and farmers tend to get really in depth with, like the farm plan, and you got Muddy Boots, I guess is one of the leading cloud-based ones for this. Some of those can integrate into like John Deere, if you're using that from a tractor specific basis, and drag some of that data in. But they're completely separate from the finance systems. And so anytime you're looking to sell anything, you're having to replicate everything across multiple systems, which duplicates so much time. And because, I guess, as you said earlier, Jack, generally they're not investing in, expensive finance teams, because they're not generating loads of value. It's an owner-managed business. You don't have the time to replicate it. So they make a decision, okay, we're going to do finance in one area, we're going to do operations in another area. And you've got no way of kind of combining that data unless you spend a lot of time doing it. Now, there is a weakness in the system, in the space at the moment, which is that those operational systems have just not properly built into modern cloud-based systems at the moment. We've done a review of the marketplace, and although we still think that Muddy Boots is a leader in the space, they're not built into finance in a proper way. And you've got the likes of Farm Plan, etc., that do have the kind of integrated system, but they're very traditional in how they operate. So there's a gap. Now, I feel that gap will be filled over the next few years, because there's been a drive, a willingness to try and do something, but there's just not been a good partnership that's developed to allow that. So what we've got to do at the moment is kind of work out what's an effective way to fill it. What's a way that we can still generate value without increasing a lot of admin. And the way that we've done that is by looking at, okay, let's create cost centers from a financial reporting point of view, and let's allocate costs from a financial perspective against those cost centers. So that is generally a crop and a year. So when you think you're going to kind of, sell that crop, and then what you do is, over time, you've got a budget for that, and you can report against that budget. So you can import the budget against the cost center, and you can report against that. And Xero works quite effectively for this. You have to do some customization in Xero, but Xero, QuickBooks Online, any of the general systems that enable you to kind of splice data by cost centers, you can deliver on it. And we've found for a lot of farms that are looking to move into a more streamlined cloud-based system, they're quite reticent about doing it, because they worry, are they going to be able to get the splicing of data? But it can be done. You've just got to really think about it and design your chart of accounts in a very specific way to enable this. But I guess, as well as that, I've always experienced a main pain point is actually just getting the data in the system in the first place, because like, I guess, not-for-profits, farming clients, farming businesses have many people that need to approve things that spread around across, do different things in the business, and paper ends up moving manually across everywhere. Is that something that you kind of experienced, Jack?
Yeah, I mean, it's getting better. It's definitely getting better, but you do have lots of touch points, and one of the big challenges is trying to figure out which of those touch points are worthwhile, which are required, and which can be cut out. So you talked about crop compliance software before, and if you think about the traditional farm admin team, if you've got a farm manager that's putting information into crop compliance, they're telling the system what work they've done. You've also got the bookkeeper putting the invoices for the costs that are allocated to those things in a separate system. So you're basically putting the same information into the system twice. And actually what you want to do is put it in once and have one person touching some of it and one person touching the other. It doesn't really work like that at the moment. So you do end up with effectively the cash book, two systems that produce very good data, but very good data that does only so much. Cash book, crop compliance. If you could marry them together, you've got the gold standard. But actually doing that is incredibly challenging. Picking up on a point you said about reticence, what we're seeing is that the younger generation, and I do that, the younger generation are coming through, and they are, generalizing massively, they're more demanding of the outputs of the technology. Their expectations of what their systems can do and the sort of information they can produce is much higher. Their familiarity with the internet, with software, with technology is more. They know they can do more things on the go, and so they come to us and say, well, I want to know how we're doing. Why can't I know how we're doing throughout the year looking on my phone, on my my Zero on my phone? Why can't I do that? And it's a valid question. It could, because in many other sectors you can. So that is driving change, and it's making the software companies stand up and go, okay, actually we do need to do this.
Yeah, it's information at your fingertips, isn't it? And there are, little, I guess, or newcomers to the market that are trying to change things. There's a really interesting tool that works on the contracting side. So if you're a contracting business in the ag space, AgDrive is one to keep your eye out on, because it is focused specifically on that, the management of that, and operating, I guess, crop management and finances for a different, piece of land that you do not own. But if it's your own land, there's still challenges around marrying up that detailed crop compliance and finance side. But from a payables perspective, like generally a really good efficiency saver is a combination of expense management tools such as Dex and Approval Max. Approval Max can handle the complex approval process that go through a landed estate business, and Dex is just a really great UX for user experience, like user interface for people that generally don't use tools a lot. So, someone that is out in the field that just needs to pay for something and get the invoice and so on, basically just take a picture on your phone. You don't have to worry about it anymore. Dex is perfect for that. So we've found that bringing in simple systems such as Dex and Approval Max, which we use at Scrumland as well, actually has a big difference on how businesses think about what they're doing from a digital perspective. And it's probably the biggest digital transformation piece that I've experienced working with farms. And a good place to start, right? If you move into the cloud, get that in place first. That's your bread and butter before you think about how we deal with all the other areas. And you talked about diversification, Jack. I mean, you've got property management, you've got farm shops, you've got event management, and each one of them has a different way of I guess, handling data, tracking data. So let's touch on the property management side. I found a lot of farms handle it in two ways. They either tend to do it themselves, and this could be residential or commercial, or they kind of outsource it to someone that's managing that. And the management of it tends to be, I've seen from working with agriculture business, quite hybrid. It's not like when you've just got a residential portfolio, you just kind of hand it over to a letting agent. It tends to be kind of part done internally and part done externally. Is that quite normal across the ag space?
Yeah, I mean, it's part of this sense that businesses in the sector, their boundaries are quite blurry. So if this is my estate, and the majority of it is farm, but in the middle I've got some cottages, and on the edge I've got some cottages, and you get the sense. yeah, I might have an agent who looks after some of the legalities of the lettings market and make sure that I serve my notices properly and I get my leases in place and all that sort of thing. But when a drain is blocked and it needs
Yeah.
unblocking, the person who's usually best placed to do that is the people on the farm, because they have a lot of the equipment and they have people, and at certain points of the year, those people are less utilised than others. So you end up with those weird hybrids where the letting agent is there for some jobs but not others. And that comes down to scale as well. Some farms have 2 cottages, some farms have 100. Some farms have barns that they've converted and let commercially, some farms don't. And those things all require different amounts of attention and different things. It comes down in a large way to resource and finding the resource that works best. Some people are quite minded towards these things, and some people really just want someone, the lock and leave type mentality where someone else comes along and runs it. I don't think I have a single client on my portfolio that doesn't have something to do with their diversified property business.
Yep.
But that does range from being very hands-on to less hands-on.
Yeah, agreed. And that, I guess, comes back to then the profitability reporting again, because everyone that I've spoke to in this space wants to know, well, actually, which of my properties are making money? Do we need to do something else with it? Maximize the utilization of this. And so you can just go, well, what's our profitability over all of our properties? But that doesn't really help you make decisions. So you've got specific property management software that can handle, management repairs, that can, to some extent, handle kind of lease renewals, but less so on the compliance side, but can deal with finance, tracking the profit and loss across this, and then push that into the finance system. So ones that I know clients have looked at and some have adopted are Arthur Online, which is quite a generic residential and commercial property system, and then Landlord Studio focused mostly on the residential side, a lot simpler, cheaper, but it's maybe a good place to start if you want to kind of dabble in that area, want to look at. I want to touch on a couple more before we have to wrap this up. So you've got farm shops, and a specific issue with farm shops is, one, you need a till. And so you've got high volume, and low cost, I guess, or low value transactions, and tracking all of that. You want to integrate that into your finance system. You can just automate the whole thing. A good place to start with this is simple systems such as Zettel. You've got other ones such as Vend out there, which may work. But what you don't want to do is just go and buy a till system that doesn't integrate into your finance system if you move into the cloud. Think about what you want to do from a strategic point of view. Make sure it integrates well. And then you want to reconcile the deposits. So the ones that generally you'll be using like a payment gateway, you want to make sure that that's generally wrapped up on a daily basis with a kind of a cutoff, that cutoff time reconciles with the same one for your till. So it's a one-to-one reconciliation in your finance system. This is the number one thing that most businesses get wrong when they integrate a till system. They just do not reconcile it, do not align this. And so that every day doesn't match, and then you have no idea if you're making money or not making money, or if you're losing money out of the till. It's the number one thing to focus on. And then I guess the other ones being event management and to some extent people management. Is all about tasks and cost splitting. So something that I know that people have looked at is like those task management systems such as Asana, the ability to just kind of create like a little checklist on a daily basis, but also people management systems such as Deputy or Plan Day, where you can drag people into different functions that they need to do. So on a daily basis, when you're kind of going, okay, you need to go do this, you need to do this, you're dragging them, and they've just got a little checklist. They know what to do as they go through the day. And that can integrate into payroll systems such as Employment Hero and create a split of your payroll costs across all of your cost centers. So as you then push that into your finance system, it creates your payroll cost split automatically across all of those, which is I guess the second biggest, maybe the biggest cost that you need to split across all your areas. Do you see, Jack, I guess, people in the space, I guess business owners, ever looking at how they split payroll costs across their various departments?
If it's done, it's normally done quite manually and kind of let's come up with something and go with it. It's the same analogy as the property. You build a venue on site, convert a barn, turn it into a venue, but who does the maintenance? Well, reality is it's going to probably be someone who started life on the farm and does a bit of ad hoc maintenance as and when required and as they have the time. Splitting the cost of that, is it done? Maybe not. It will
Personally, mate, from the conversations I've had, I just don't see it being done, because to do it manually, it just takes way too much time.
Yeah.
You need a system to automate it. And I guess, look, we've talked about lots of different areas. We've talked about the challenges with the diversification. The main thing is you don't want to try and do it all at once. You want to create a plan. And the first thing is to go, well, we need a core system to enable us to do all this. And I guess, as we've talked about many times on this show, getting that core finance system that everything plugs into is your starting point. Then move into expense management, then move into all the areas that come around that, such as diversification.
Yeah, I mean, you and I have seen that. We've worked on clients who have converted barns, open venues, wedding, whatever it is, and really interestingly, this was not a client of our firm when they did this, but came across afterwards. They had taken the conscious decision to set their venue business up on zero when their farming business was still on farm plan. So something somewhere had said to them, this is the right thing to do for this business. But they hadn't done the rest of it. So they hadn't taken in all of the other linking and thinking about those integrations you mentioned. What they'd just done is gone, right, zero is the right piece of back office software for this business compared to the farm. Like I say, wedding venues, barns, they don't take 2 days to convert. They take a period of time. So you've got time to plan. So if you can get in with those clients at the start of that process and have that conversation around setting this all up from the start, it should all work fine. But it's just getting in there and having that conversation nice and early.
Yeah, definitely. And it's a lot more challenging, as we've experienced, to try and align that afterwards if you've kind of split it, working in two different ways. And it's just the burden on your finance team. They're working completely different ways. So let's bring it all together. You get that automation, you get those efficiencies.
Yeah.
Look, I think that's a great place to wrap this week sharp. Thanks, Jack, for coming on. You brought loads of insights, and I know that you're a forward-thinking accountant in this space and always trying to bring automation in to help businesses drive in the ag space, drive their operations forward. Hopefully, this episode has provided you all with valuable insights that you can take forward. Please do check out the show notes for links to both Digital Disruptors, SB Digital, and what we've been doing in the ag space. Plus, any other software that we've referenced in the show that may be of interest. And if you want to ensure you catch future shows, please do subscribe to our YouTube channel and make sure you look out for releases every Thursday morning at 8:30. Look forward to speaking to you next week.